MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Ted, why does energy need to lead the way right now?
This is a topic that we've been talking about with our subscribers now for a couple of weeks. And in our latest Canadian Insider Insights newsletter, which is available for free, by the way, on CanadianInsider.com, free to air, you can just go to our Market Center page and look at all the previous issues and look at the current one. We talk about what's going on in the energy sector with insiders, and it is one of the most upbeat areas both in Canada and in the United States. And energy is the most sensitive to that in the scheme of things. Yes, in energy oil patch, we have these sort of peculiar factors like OPEC and pipelines and the bit, and yes, they can all weigh in on investor sentiment, but at the end of the day, if you've got a strong global economy, the oil price is going to do fine. And to see this stock market sort of continue with the advances we've seen in the first quarter, we really need to have some confidence that global growth is going to keep going here and maybe pick up a little bit. So that's why energy is so important. We really need to see energy lead the way. It has been doing that in the United States. We are seeing some signs of life in Canada. I think the jury, is still out whether it can maintain its momentum. But, certainly insiders are buying on weakness in the Canadian energy patch, and insider sentiment there continues to be strong. The sector has done very well in the past month. It's led the way, actually, in Canada for the past month, and it's given a nice boost to the Canadian Insider Index, which is focused on mid-cap stocks. So far, so good. Now, but let's be realistic here. We are in a strong seasonal pattern for crude. Those of your listeners who listen to Bob Hoy every Friday, like I do, know that we're in a seasonally strong period for crude, and that can continue for quite some time. So we're really not going to know if this is a true story in terms of global growth beating expectations probably until the fall. So maybe a little bit of uncertainty here as we go through the summer, as there always is in the summer. But let's keep our fingers crossed. Hope is not an investment strategy, but let's just keep our eye on oil and hope that what we're seeing is a real thing, and it's not just a blip in summer seasonals. Now, the bulls do have, I think, one thing going for them, which we mentioned in our U.S. report to our subscribers. The IMF came out this week and downgraded global growth. So, there's been a lot of criticism of the IMF in its day. But one of the things they've never been criticized for is being ahead of the curve. So perhaps we're seeing some peak pessimism on global growth. So we'll have to see if the IMF ends up being a contrarian indicator on global growth here with their downgrade this week. And Jim, just looking at the stock level here for the energy patch, we've noticed that in our top 40 report, which we put out at the beginning of every month, we're also getting some confirmation that the energy sector does have some opportunities at the stock level. So we're getting some good signals as well. From there, we would like to see it move up a little bit more. We'll see how the report for
May comes out. But we have some, interesting developments, I think, certainly in the services area, in Canada, the oil and gas services area. Whereas in the United States, it's a little bit more broadly based in terms of opportunity in the stock level. In Canada, we're still, I think, a little bit more in the early stage of investors believing in the story. So we will have to see if it can continue. We can start seeing a lot more of those exploration and production companies hit our screens. If we can start seeing a couple of the bigger players come up the screens as well, that would be good. But in general, though, no one makes a lot of money in the market. He's sort of buying at the top. You've got to kind of get in there when pessimism is still fairly pervasive. Though in this case, the energy patch, there are elevated risks, and we will not have a full confidence that we're into a new upswing here in global growth, and can possibly take out new highs in the energy sector for a few months. So we'll have to really keep an eye on it, but it's certainly a very exciting area to look at right now in Canada, and particularly given the politics that's evolving. We're getting an election in Alberta, and everything that I've seen in the polls, it looks like there's going to be a new government there. But the real, of course, and the real big one to watch will be the federal election in the fall, where we'll see if any better, more oil-friendly policies come out of Ottawa from that. But in general, it's going to be the global growth that has to be the tide here that lifts all the boats, we think, for the energy sectors on both sides of the border.
We'll have more with Ted Dixon right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Ted Dixon. Ted, why should short sellers not pick stocks with high insider commitment?
Well, that's a good one, Jim. We've been looking at the short data that's now published by IROC every 2 weeks, and looking at the research that we've seen from academic studies, we noted that there's some pretty good evidence that if you're going to short a stock, your chances of success are better when you're also seeing insider selling, or there's very little insider ownership type of activity there. So what we've done is we've looked at our signals on insider commitment, and that is holdings of officers and directors and their recent buying, and we looked at that against companies that have various levels of short selling interest. And so we've developed a set of signals that look at the amount of short selling and the amount of insider commitment. And ideally, what you want to see, if you're a short seller, you want to see a stock that doesn't have a lot of insider commitment. So I can give you an example. There's been a fair amount of short selling in a stock called Sleep Country, which is a mattress provider. Well, that's worked out fairly well recently for the short sellers. The Sleep Country stock has been falling out of bed, shall we say, and lo and behold, that stock does not rank very highly on our insider commitment rankings. These are quantitative rankings. It's all done numerically. We don't sit around and do a judgment call at Inc. This is all based off of the numbers. Now, on the other hand, you've had some notorious, I would say, short-selling flops. And one would be, for example, Badger Daylighting, where it's always so it seems to be in the sights of short sellers. And, Badger keeps going up. Well, it's got very high insider commitment. And most recently, which we also wrote about in our Insights newsletter, we looked at Shopify, where it's been, again, a target of a short-selling report. But you know what, Jim? They've got fantastic rankings in terms of our insider commitment. Yes, there's been some selling in Shopify by insiders, but they own a lot of shares, and the CEO owns a lot of stock. So it's really kind of an uphill battle, we would think, for the short sellers with companies like Shopify, companies like Badger, and even companies like Home Capital Group that have strong short selling. Now, it doesn't mean that of those three stocks that I mentioned, look, all three of them could turn south, because our thesis here is based off of average results, so they're always going to have surprises one way or the other. But I guess our point is, if you're going to go in the short selling game, it's hard enough, to go against the general trend, which over time is usually higher for the stock market, notwithstanding some of the issues we've had in the past decade. But why not go after a stock that's got lousy insider commitment rankings, where the insiders are haven't shown that they've got a big ownership culture at the firm, compared to some other opportunities on a relative basis. So that's a new take that we've been looking at Inc. Research, and you can get short position data on CanadianInsider.com for every stock in Canada. So take a look at that. Is the short selling going up, and then what is that Inc. Edge Outlook ranking of the stock, which we also provide on Canadian Insider now. And if what you really want to do is drill down into that Inc. Edge Outlook. There's three components. There's the value, the insider commitment, and the price momentum. You want to zero in on that insider commitment ranking and see if it's strong. If you've got strong insider commitment and you've got a lot of short selling, generally that could indicate that there's a short squeeze possibility. On the other hand, if you've got very little short selling activity in the stock and you've got a strong Inc. Edge Outlook ranking, well, that's a pretty good sign too, because it means the short sellers, haven't sniffed anything at that company. So that new data that we've put on the website, it can be pretty handy for people, and I think it'd be pretty handy for short sellers too. So if you're in the short selling game, you definitely, I think, want to take a look at the insider levels, and just if for nothing else, just have a double check on your conviction level. Do you really want to short this stock? Are you that convinced that you've got a thesis that the stock has got to go down? When you see strong insider commitment levels at the company, in general, we would think there's probably better opportunities to go short elsewhere.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, what does the last few months of the Chicago Fed's Financial Conditions Index tell us about the Fed and probably gold?
Well, Jim, that's a great question, and probably the first answer to that question is explaining what the Chicago Fed National Financial Conditions Index is. Basically, this is a series of data that, the Midwest Central Bank in the U.S. has come up with to look at whether monetary conditions in the U.S. economy are restrictive, which would be sort of bad for financial assets, or whether it's loose, low rates, low credit spreads, that type of thing. And so they compile all this into a series. And what's very interesting on this series, and we're going to be talking about this in our gold top 20 stock report, which we'll be releasing next week, what we saw towards the end of 2018 was a little blip up, and I mean a blip in this data. So the Fed was starting to try and make things a little tighter, getting back to normal. Normalization is what, the buzzword at the time was. We're going to, try and get those interest rates back to normal. Well, it's just a little blip, Jim, on this chart when you look at it on a 10-year basis. And what happened? We nearly had a financial, crash. I mean, stocks were falling out of bed. Credit spreads were blowing out. I mean, it just shows you, I think, how precarious the situation can be if central banks get it wrong, in the sense that, if they raise interest rates too much, one can debate whether rates should be higher or lower, but the fact of the matter is they tried to move rates they were going to move rates even higher than they have, and look what the result was. Okay, so what does that mean? Well, to me, that means is that it's going to be very, very hard for the Fed or any other central bank to raise interest rates anytime soon again. So in general, that should be positive for the gold market. Now, this doesn't mean it's going to send gold to $2,000 an ounce. I just think in general, with the Fed not being able to really go down any further on its tightening path, it seems to have a ceiling here. It should provide gold with, a base of support. I'm not even going to put a number on it, because I think what's important for the junior mining space is that expectations of some sort of stability in the gold market, because I think we can have that. Yes, it's under $1,300 today. Yesterday it was above $1,300. I would look past these psychological blips above 1,300 below. Is it going to break out? I mean, sure, if gold were to break out, that would be fantastic, for the gold space, of course. But really, if you have a well-behaved gold price, sort of in this 1,100 to 1,350 range, for the next year even, well, that's fine. That's fine for the junior gold space. To carry on with exploration, to develop your projects, to develop base case scenarios for mine development. If you have a stable gold price that people begin to believe isn't going to go down, right, significantly, then that should help the junior mining sector, at least, stay on its feet. What I think we're suffering from here in the junior mining sector is this recollection of the big bear market from 2011, that big tumble, from the highs of the fall in 2011, and it's been a long road down. But I think we're seeing some stabilization on that now, and you look at what the Fed tried to do at the end of last year and what it couldn't do, just goes to show, interest rates are not going to be a big competitor for gold going forward. Yes, this is probably about, on the short end, in terms of that 3-month, 6-month, 2-year interest rate. This is probably about as good as it gets for interest rates versus gold. Look, if global growth manages to skyrocket here, as we talked about earlier, we talked about stronger global growth in the first segment, but we're not talking about skyrocketing. We're just talking about it getting on its feet. But, if we were to have a real surprise on global growth, then maybe it's a new ball game, but I don't see that scenario materializing anytime soon, at least, in terms of perceptions that we're into a big boom. I don't think that that's a huge risk. It's possible, but I don't think so. At best, people are going to start feeling better about the economy, but that's a lot different than a boom and seeing interest rates skyrocketing. But at least for the summer, I think there should be some there should be some confidence that the gold price is going to kind of hang in there, and that yes, we usually have these seasonal weaknesses in the junior market in the summer. Sell in May, go away seems to be on steroids for the junior markets in the summer. But at this point, if we do see weakness in the broad junior markets, there's probably going to be a lot of nice buying opportunities for the fall. So I would keep that in mind at this point. Let's just try and look through these $10 moves in gold here, $10 there, unless we see something fundamental change, that this financial conditions index starts to really rip higher. Then I think the prospects for the junior mining sector are stable as a base case, and probably looking up over the medium term in terms of where we're headed for the gold price, because there's a lot of factors going in its favor beyond just stable financial conditions.
Ted, thank you so much for being on the show.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.